Hey everybody, Boris Schlossberg from BK Forex. Welcome to our daily Forex technicals for 4/12/13. Yen controls FX. As always, past performance not indicative of future results. Trading Forex carries high level risk and be suitable for all investors. High degree of leverage can work against you as well as for you. Before deciding to trade, such leverage products should carefully consider investment objectives, level of experience, and risk appetite. Possibility is that you sustain a loss some of your initial investment, and therefore you should not invest money you cannot afford to lose. And you should be aware of all restrictions which are in March and seek advice from a financial advisor if you have doubts. Information including commentary trader is provided at BKForex.com should not be relied upon the substitute of extensive independent research, which should be informed for making investment decisions. BK Forex LLC in common, merely providing this information for your general information. The information opinions presented do not take into account any particular individual investment objectives, financial situation, or needs. All investors should obtain advice based upon their unique situation for making investment decisions and should tailor trade size according to their own risk appetite. We're not responsible for any loss incurred by readers and clients as a result of this information, and we do not render investment, legal, tax, or other professional advice. If such advice is needed, please seek professional competent advice of professionally competent professionals. Okay, look at the yen. This is really the critical story here as everything is going on. Again, another failure at the 100. We came in very, very close yesterday in the U.S. session, and in many ways, I think this drama between 199 is pretty much sums up the whole week, because as this trade goes almost everything else in FX because it's being affected by the yen crosses. So I'll pull this out and just show it to you more in the charts. But for right now, as we stand, dollar yen broke down through the 99.50s. We obviously couldn't take out the hundreds in North America, weakened into Asia, a little bit of profit taking. However, and this is really the other interesting thing about this whole trade, is that despite the fact that it's weakening, it hasn't broken, and that is, I think, probably the single greatest positive thing for bulls to assume that unless and until 99 breaks, the run to 100 is still possible. The critical thing though is where we stand here. We start breaking 99s. It looks like we've pretty much set up a double top here, and 100 is not going to be tested for the near term. It's very possible that even if we break 99s, we come back and retest the gap, which we had, the gap opening, which we had at the beginning of the week on a more negative profit taking move. Remember, when this thing starts to profit take, it's going to take a very, very sudden move. So why does this affect everything else? Because you see the yen crosses just basically going up and down with this yin yang, and now euro yen going all the way down is driving euro dollar down, and that's how everything gets kind of related. So euro, which also tested 31.50, kind of failed and had a big sell-off in euro yen. That just took us all the way down in the euro dollar, all the way down into the 30.69s. Having said the same thing though, as we come in here, support becomes critical. Support here at 30.50 has been rock solid, and that's been the key level that everybody needs to watch in the euro dollar. We break 30.50 to the downside, then it opens up and unwind all the way out to 1930, to 130s. So that's kind of how we're looking. Basically, this range, which has been dominant for the last really pretty much since the start of the week, in the euro 30.50, 3100, in the yen 99.100, the way it resolves is very likely going to give us some directional clues as to where we go from here. As to pound has been sort of very quiet and neutral, but it's also backing off a little bit, of course, on the yen crosses off the 54th, but not as much as the euro. It remains relatively healthier and well bid. It's one of the reasons why euro pound is actually, where's my euro pound here, is actually remaining relatively strong here. Excuse me, it is relatively weak because cable is holding out. This 85.50 was a double top. Looks to be in the euro pound, and now the 85 is given, which is going to be a very interesting level here, because once we start peeling away from here, we really could come back and retest 84.50 on a big double top formation in the euro. And lastly, Aussie not really having any kind of a move today because it's staying out of the way. Although it is, it's clearly weakened and came off the test of the 106s. With the Aussie, this 105 seems to be a pretty strong support level. It was bought just yesterday, and that seems to be giving us a more positive bias. If we come back and we get a lot of buying as the day progresses, if yen starts to come back and makes another run to the 100, it's very possible that we see the Aussie. We see cable through the 54s. We see Aussie back through the 105.50s towards the 106s, and even the euro could come back and recover and take out the 130-100s. But for right now, all this pressure to the downside, and the fact that we're closer to the bottom than we are to the top of the range, and now this is the second time we're trying to test this bottom of the range, does not bode well for a potential run to 100 as the day progresses, and does not bode well, obviously, for all the risk trades which are getting peeled off to the downside. So watching this very, very carefully. Boris Schlossberg for BK Forex. Wishing you guys a great weekend and good trading on Friday. Over and out.